Hey, Rena. Hey, today's
Hi.
Hey, how are you?
doing good, thanks. How about yourself?
Not bad.
Good to see everyone. We'll just give folks a few more minutes. Keep joining, and then we can kick off. Appreciate your time. Hey, Hamlet, how's it going?
Hey Alan, how's it going?
All good, all good. We'll just maybe wait one more minute just to see if some more folks join. Um, just so you know, myself, Hamlet, and Rena are from the JP Morgan Workplace Solutions team. Um, Lisa from My Next Raise is not able to make it this morning. Maybe she might pop in shortly, but if she does, she'll say hello. But otherwise, we'll be taking you through a cap table best practices workshop this morning and afternoon, depending on where you are in the world. Um, so we'll just wait till maybe 9:05 my time. Not too sure what time other folks are on, but we'll just give folks one more minute and then we'll kick off. And I'm just going to share my screen in the meantime. Okay, cool. So looks like this is our group for this morning. Um, Once again, much appreciate your time. Thank you for joining this session on best practices for startups when it comes to cap table management. So great that we were able to connect with you via our good friends at My Next Raise. Lisa and the team over there are great friends, so it's good that we're all able to connect and go through this session this morning. Just as a quick introduction, my name is Alan Gould. I look after business development for JP Morgan Workplace Solutions Cap Table Management. I'm joined by my two colleagues today, Rena and Hamlet. So as we go through this session, please jump in with questions. Really want to make it as interactive as we can. If you have any anecdotes, if you have any ideas, any personal stories that might be useful to share with the group, definitely do. We're all going through the fundraising journey, so really want to make this interactive and share questions and ideas. So the plan for today is I'm going to take maybe 10 minutes going through just some best practices, I suppose, day in, day out. We're speaking to founders in the same positions as yourselves, scaling businesses, bringing ideas to market and fundraising. So we want to share some of those anecdotes and kind of best practices that we see come up time in, time out, day after day. And hopefully there'll be some nuggets that you can kind of take away. And I think in particular, as we approach this session and this topic, it can become quite complex. I suppose there's financial jargon across finance in general, but I suppose this is quite a niche area. So really what we want to be able to do today is just start seeding some of these kind of terms and ideas, just so you can kind of start to become, excuse me, familiar with the terminology and some of the concepts that are going to relate to cap table and ultimately your equity as you grow your business. So, and then the second part we'll do is we'll go through a quick demo if folks are interested in having a quick look at what our platform and product looks like, and happy to take you through the offering as well. So we'll kick off, like I said, quick introduction, a little bit of an overview of the solution, some of the best practices, and then we'll kick off some Q&A and a product demo. Like I mentioned, my name is Alan Gould, look after business development for the cap table management product within JP Morgan Workplace Solutions Group. I've kind of worked across the venture-backed ecosystem for the last 8 years. I've worked for a fund for a while, ran some events for a tech events company across the venture ecosystem, and then worked for the fintech business that JP Morgan acquired Global Shares a couple of years ago. The Workplace Solutions Group, just so you know, is kind of encompassing across a number of different products. What we look at today is the early stage solution. So it's designed for pre-seed through Series C, high growth technology companies when it comes to cap table management. We have a bunch of other solutions that can help take you from super early doors all the way to potentially being a public company. And same for JP Morgan. We can obviously help you through that whole journey. Platform wise, we'll go through a platform demo and product demo post the best practices. But just to give you an idea, I suppose, of what we generally do, essentially what we do is we digitize your ownership in your cap table. We help you manage your stock options plans, which are going to come into play when you start to issue out and grant options to early employees and have that as part of your hiring strategy. So we just make that super simple. Product is free for up to 100 stakeholders as well. So happy to go through that in a little bit more detail afterwards. A big part of what we want to do as well is support you. So we have a complimentary onboarding service as part of the product. So again, we can go through that in a bit more detail later. What we really want to focus on today is best practices around managing your cap table and ultimately your equity stack as a whole. So I think this is something, and for us, we're totally aware this is maybe not the coolest topic in the world. It's not something that's super top of mind right now as you're thinking about more important, kind of super urgent things like MVPs, customers, getting real traction, generating revenue. All they're super important things when you're building a business and starting to go to market. Cap table is one of those things, I suppose, that kind of lies there on the side locker, and it's maybe not too important right now, but it's something that when you need it, it's super, super important. So again, what we want to be able to do today is give you a good idea in terms of what you should be thinking about, maybe a little bit more strategically in terms of, like we said, it's maybe not super important right now, but when it is important, it's really, really important. So just to give you an idea of kind of when it will be important, what to start thinking about, and starting to kind of look around the corner and just think strategically about how you're building your business. So I'm going to go through 4 kind of main best practices. Again, really welcome questions as we go through these 4 pillars. So certainly make it interactive. So the first piece is, and for us, this, again, when we go to simple, this is kind of super basic, but super, super important. And I think we see founders and teams making this mistake quite a lot, where say you'll have an idea, you have maybe 2 co-founders, you're starting to work on it, maybe somewhat informally, you're kind of ideating and trying to figure out, is there a business here? Is there a real customer here to buy our product? And you kind of start to become a bit more formal, and you're kind of saying, okay, maybe we should incorporate the business. Something super important that we see maybe not done sometimes is documenting who owns the business, even from the super early stages. So again, you have 3 co-founders, you'll probably split that 33% each. Documenting, and it might sound like a really basic, simple thing, but again, we see this mistake being made quite a lot, but documenting that from day 0 was really important. Just making sure everyone's on the same page. We've seen examples where, again, there's 3 co-founders, split 33% each. maybe 6 months after incorporating, one of the co-founders says, hey, maybe this journey of kind of startup world and land isn't necessarily for me. And then they go back and go and take maybe their old job or go and move on to another kind of more normal job rather than building a startup. But ultimately they're walking away with 33%. So it just will have knock-on effects in terms of, say, fundraising. For example, you go and speak to investors, they'll have a look at your cap table. They say, okay, there's two founders here. There's a third person with 33%. Like, how does that work? What's the dynamic? So it's just something, I suppose, number one, you want to document, but also just be aware of how you deal with that, and having things like vesting schedules in place from an early doors will help you to mitigate some of that risk. The second piece is touching on the fundraising process. So we would have touched on it a little bit there just in terms of knowing your cap table, but cap table has a huge impact on your fundraising process from a few different angles. But I suppose the biggest angle is your investor conversations. And I think for us, we see the common theme of signals, you could call it, when you're having those early stage investor conversations, you're speaking to investors, you're trying to give them positive signals. Ultimately, you're trying to convince them to invest in your business and be part of your cap table. The other part of that is the actual investors, how they construct their own portfolio. So think about, they have maybe 100 million fund, they want to write 20 checks over 3 years. They have their own specific ownership targets. So what they'll want to see is a clean, concise, up-to-date cap table, and one that makes sense for them. There's going to naturally be things like dilution that are going to come into play. And that's important for you as a founder to be thinking about as well when you think about the decrease in your ownership when you do take on external capital. But investors are going to be thinking the same. They might write a check in your seed round. They maybe will have some follow-on reserves to write a check in the Series A round, but they're factoring in dilution as well. So there being enough ownership on the cap table for them to come in, but equally they want to see you as a founder owning enough of the business to be able to be incentivized and motivated to continue building the business and stay in it for the long run. So that's super important to think about. And again, for your own selves, and we'll touch on this when we go through some of the product demo, for your own selves as founders to be thinking about how much of the business you own, but factoring in that dilutive effect that will come along with raising capital. The third piece I want to touch on is stock options. So this is not always maybe the first thing that someone will think of when they hear cap table or kind of managing ownership, but the stock options, I mean, number one, super important asset. I think we'd always say they're probably the biggest asset you have as an early stage company in terms of bringing in the best talent, retaining that best talent, and kind of showing them the vision and also giving them access to potential liquidity and wealth at some stage over time. Hopefully if the business kind of grows to the scale that you're planning to, and then there's some liquidity or an exit event at some stage. But it has a significant knock on to the cap table. Again, both from a dilutive perspective, but also from an administrative perspective. So again, think about, you're bringing in early employees, they're taking a risk in terms of joining an early stage company. They see the vision, they see the potential and growth. They're also probably taking maybe a small haircut on the cash compensation as part of their whole package when they join. But the stock options are a huge part of that attraction, I suppose, for them as well, to be able to say, okay, I'm getting stock options. I'm very tangibly impacting this business that I'm building, and then I'm really an owner. I think it's a huge kind of part of the culture that we see clients using is, there's an ownership culture there when employees have stock options. Those stock options hopefully will be able to be exercised by those employees, which ultimately means they're buying the stock options, becoming shareholders. So this will have a knock-on effect to the cap table where, number one, those employees will become shareholders, but they'll also then have a dilutive effect on the cap table. So a few different angles there, I suppose, in terms of using stock options, starting to think about them strategically in your hiring strategy, but also from an admin perspective and from a cap table perspective. The fourth piece I want to touch on, and this is again a little bit down the line, more strategic, I suppose, in terms of kind of seeing around the corners and planning for the future. But I think no harm in starting to think about and just be aware of some of these things. I suppose the thing we'll always kind of touch on with this particular pillar is that ultimately, if you decide to take on venture capital and go that journey, it's a different type of journey to maybe having just private investors or just angels, or maybe if you bootstrap the business, because there's naturally going to need to be an exit at some stage or in some shape or form for those venture capital investors to return their investments to their own investors who are their limited partners. So it's a natural part of the cycle and part of the journey. But I think for you, again, thinking strategically about maybe what that might look like, in what shape or form, and also how the cap table will impact it. I think for, you see these headlines on whatever media outlet you're looking at, your technology news, and we'll see these big exits, and you see company XYZ bought for $1 billion, but ultimately what they're doing is buying the equity. They're buying the cap table ultimately, so they're becoming 100%. Now it depends on the deal, but they're probably buying 100% of the cap table. So you having your cap table up to date, squeaky clean, knowing exactly where everything is, and in one single source of truth will save you a super amount of time and money at that particular period. So again, back to signaling, back to just being organized and having everything centralized. So I think the common theme across here is, yeah, it mightn't be hugely pressing right now, but it's going to have a super potentially positive impact on lots of areas as you grow. The last and kind of bonus piece to this is we'll always say digitize. We have a product, but there's also lots of products out there and there's lots of resources out there for you to utilize. But we will always say make sure you digitize this from the earliest days, whether you're using us or another platform. But we would always encourage companies, even at the earliest stages, when you just have a few, maybe just you and your co-founders, you might have an angel investor and an early employee. Getting it on a digital platform will really manage risk and allow you to avoid some of the pitfalls that might potentially come with managing this on a spreadsheet. I'll take a quick pause. I've gone through a decent chunk of information. I think we're always aware that can be a data dump, and there's lots of different jargon pieces and terminology. So I'll open it to the floor for a minute or so if there's any questions. And if not, we'll jump into a demo. But I'll open it there for a minute. Even if folks wanted to introduce themselves, that would be great to hear from you. There's a question here. So does JP Morgan offer stock transfer agent services as well? We don't. So we're actually not a transfer agent on the cap table management side. The way we were designed is that we will reflect all of your transactions. So we're really the data processor and the technology provider, but we're not a transfer agent. Thanks for that, Bernard. Cool.
This is Thaddeus. No questions, but this has been very helpful so far.
Great stuff. Thanks, Thaddeus. Nice to hear from you. And any questions, pop them into the chat or just come off mute and jump in with a question. I will go ahead and share my screen and we can have a quick look at product. Just so you have an idea of kind of what our solution looks like, and hopefully it'll be helpful for you. Bear with me now, and I will share my screen again. Maybe while I'm doing this, Rena, if you have the My Next Raise link that folks can use to register interest, if you'd like a demo, you might just pop it into the chat. Just to make it easy for folks. Okay, cool. So you hopefully are seeing my screen. Hamlet or Rita, maybe give me a thumbs up if you can see it, just to double check. Perfect. So we'll do this super quick. Not meant to be a sales exercise. This is really just educational, just to try and join the dots of kind of what we've talked about in the best practices side of things, and just so you can kind of bring to life some of these kind of bits of terminology and concepts, and kind of ultimately how you will manage your cap table going forward, but also to kind of visualize what it would look like when it becomes complex. I think that's the thing for us. And back to the point of, it doesn't feel like something that's pressing now, but it's something that can become very complex very quickly when you maybe raise that big institution around you. You have institutional venture capital investors coming in, you have multiple angels still on the cap table, maybe they have different types of instruments, so it can become complex very, very quickly. So this is more, I suppose, akin to like a seed or Series A style round. So just to start visualizing what it would become at some stage in the future. So I'll show you three main things. The first piece being how we digitize your ownership, so how we digitize your cap table. Second piece is going to be a very useful tool for you when you're thinking about fundraising. So we have a modeling tool that will allow you to run scenario analysis. And then the last piece is how you would manage your stock options. So again, that's probably a little bit down the line whenever you decide to bring in more hires and you issue more stock options. But this platform will make it super easy for you to manage that going forward. So the first piece is going to be your cap table. So really what we want to do here is just make a super simple, easy to navigate dashboard that you can see your ownership and company ownership at a glance. We look at it on a fully diluted basis. We'll give you an overview of the top shareholders. You have a total stakeholder count over here. So this is important in terms of pricing. Like I mentioned, access to this product is completely free of charge if you have 100 stakeholders or less. So I would imagine that's the vast majority of folks on the call. So zero cost to get onboarded. We've all the details then down below. So these are what you would call your stakeholders or your line items. So these can be categorized as investors, they could be board members, founders, maybe employees if they've exercised options or received shares, so they're actual shareholders. And then we have a bunch of ability here to filter, edit, and export, as well as generate reports. So all really, really flexible to be able to pull information off the platform. We can also look at the share classes. So again, this is going to be something that's really important for you to start thinking about as you think about fundraising. So typically, early days, you're just going to have common stock. It could be referred to founders shares, other terminology, but it's typically going to be common or ordinary shares that are going to be issued to you as founders, but also employees. Preference shares or preferred stock is going to be something that's issued typically to your investors. Now, this can be case by case. There's lots of different examples, but that's typically what the scenario is, where investors receive preference shares, and they kind of are what they say on the tin. They're preferred. They have preferred terms. The major knock on here is that they'll have potentially different voting rights, but they also have preference when there is liquidity. So maybe there's an exit, there's a secondary sale done, whatever it might be. They're the first ones that would ultimately get paid out when they receive those shares. This is where our stock option plans will start to come in. So you'll see reserve to equity plans of 500,000 shares. This is typically, it's recommended usually by, say, your lead investor if you do a big seed or a Series A round. And it's where you want to put an option pool in place. And this will allow you to issue stock options out, but it's you reserving shares into a specific planned pool and then being able to issue those stock options out to employees. Traditionally, this is anywhere between 5, 10, 15%, depending on, I suppose it comes down to a cultural thing of how much equity you want to give to employees. We see the power in it, I suppose, and I think it's something that's trending up and up and up over the last kind of 10 years or so, is giving more ownership to employees, again, to create that kind of ownership culture. So we just make it very easy for you to track all that information here. And again, all the detail then sits down below. So you'll have all your share classes. You might have outstanding convertible instruments. Again, this is something you're going to come across in terms of the type of terms that are put on early stage investments. Usually these are used for pre-seed and seed stage rounds. Ultimately, there's two main reasons to use these convertible instruments. It's a pretty legally efficient way to raise capital, but it also allows you not to have to put a value on your business early days. So again, you're thinking about MVP, you're thinking about early traction, early revenue, early customers. You're probably not going to want to, or potentially be able, you might not have the data to be able to actually value your business. So things like post-money safes, which are the most common instrument that you'll see used across the venture ecosystem. This allows you to raise capital, not issue equity, not price the company or value the company, but allow that to be converted into equity at some point in the future when there is a price put on your company and there is a valuation put on it. Those safe notes then will convert into equity at that particular point in time. Traditionally, they'd convert into preference shares, but again, it will be case by case. And safe, just so everyone knows, it stands for simple agreement for future equity. So it's kind of the most common one you'll see across the industry. So that's the ownership. That's really what we're trying to do, is just create a super simple interface for you to manage your equity. The second piece that I mentioned was modeling. So this allows us to run scenario analysis based on different scenarios, ultimately, or different terms that you might raise capital on. Really what you can do here is super simple. You can plug in how much you're going to raise. So I'm saying I'm raising 4 million. I know my pre-money valuation is 12 million. Again, these are just estimates and kind of variables that you can plug in. I want to have a 10% option pool in place. Again, I want to use my stock options. They're a huge asset to me as an early stage founder. I want to bring in the best talent, and they're going to see stock options as a very advantageous part of that package. I have a couple of investors writing checks. And then at the same time, I've previously raised on some safe notes. So I want to see what that looks like if they convert. So super easy. I just run that scenario. It gives me a nice clean output of what a post-money cap table will look like. So it's what happens if I take on investment. So this is completely unlimited, super easy to run scenarios. There's no limit on the number of rounds or anything that you can run. You can use this as much as you like. So it will give you all that high level overview. Post-money valuation, this is going to be the total investment you take on plus your pre-money valuation. So that's going to be your post-money valuation. You'll see how much equity you're giving away as part of this round. Now, that's probably a little bit high. Traditionally, what we see through the earlier rounds are maybe 20%. As you get past maybe Series B, Series C, trends and data kind of say that it lowers maybe to 10 to 15%, depending on the size of the round. So it's something to keep an eye on. And then really what you want to be able to see is the detail. So if I scroll down, you see the pre versus post money cap table side by side. Huge thing you want to be able to think about here is dilution. So again, for you as a founder, for your own motivation and incentive for building the company and also being rewarded when there is an exit event, you want to make sure that you're thinking about how much of the business you own and how much you're going to be diluted. Again, it's a natural part of the equation when you raise venture capital or external investment that there's going to be some dilution or decrease in your ownership. So this is a super useful tool for you to be able to map that out. And again, just start to see around the corners. You have a bunch of other information, so things like dilution on existing stakeholders, the new checks that were written. We now have a 10% option pool, and I've now converted those safe notes. Again, this is another super important thing to be aware of when you think about converting safe notes, and it's what's referred to as safe stacking. So we'll see companies that raise early, they use a bunch of safe notes, but they're not necessarily thinking about, okay, those safe notes are going to convert and significantly dilute the company. So again, super important for you just to be aware of it and start to think about it as you're putting your rounds together. The last piece I'll show you is how you manage your stock options. Again, something that probably will be more in the future, but something again to start thinking about strategically and just understand that we can make it easy, I suppose, for you to manage it through the platform. But things to think about are planned pools. Like we mentioned, this is where you'll reserve, say, that 10% planned pool in terms of shares, and then you'll upload all of your legal agreements. So this is actually work that Lisa and my next raise team would help you with in terms of drafting the rules and the policies around these stock option plans. So you'll have different things like vesting schedules, termination rules if you have employees leave, different treatment of shares. So this just automates everything for you and makes it super easy to upload the plan documents, to digitize how an employee receives the granting of stock options. And also if you have board members that are involved potentially in consenting and approving those stock options going to employees, we can automate and build all of that in for you. That is a bit of a whistle-stop tour, but hopefully it gives you a nice sense and flavor of what the platform can do, how it can help you in terms of managing your cap table, but also automating some of the workflows around the stock options and just generally reporting and making this a little bit easier for you. Again, want to say thank you for your time. Much appreciated. Hopefully this has been useful. I know it's a niche area and it's something that there's a lot of kind of financial jargon around. So I'll open up the floor. We'd love to take some questions. Hamlet, Rena, same for you both. If there's anything that you think we didn't touch on or that would be useful, jump in with questions. And we'd love to hear from you. Vanard has a question here in the chat. So how do we sign up? So Rena has just put in the link.
Yep, just saw that. Appreciate it, Rena.
Yep. Perfect. Great stuff. Look forward to hearing from you, Bernard. Any other questions, Lisa, Ekaterina, Jose, Dilaram, Thaddeus? I know you came off mute to say hello. If you have any questions, jump in.
I think the only thing is our platform doesn't work for LLCs, right, Alan? So
yeah, so that's one thing right now is the platform is just compatible with C Corps in the US. If you're outside the US, we can work with you as well if you're a limited company. Just LLCs right now, we're not compatible with, unfortunately. It's something we potentially will look to do at some stage in the future, but just C Corps for the time being. Thanks, Rena. Great stuff. Give folks another. Oh, Jose has a question here. Is there support if we get stuck in using it? Yeah, absolutely. So Jose, I suppose the first piece that you would do is the registration and the onboarding. So registration, super easy. When you fill out the form, the My Next Raise form, that would ping through to our team. We'll reach out to you. if you're happy to move ahead and get onboarded, we'll send you a registration link. So that would just be sharing some of your company info, very basic info, and then uploading a couple of documents that would allow our team to get started to do a reconciliation and analysis for you. So we'll do all of that heavy lifting through a complimentary onboarding service. It's done through our onboarding team. And then we have a support team in the background. So we'll have a few different ways that you can get in touch. We have a support email, and then we also have customer success team members that would be able to help you out if there's challenges in terms of navigating the platform. But through the onboarding, we would help you get up to speed, and it's something that you get up to speed very quickly with. Hopefully that answers your question.
That was great, Alan.
Great stuff.
Awesome.
Cool. Hey, Katerina, Dilaram, anything else that's standing out for you? Jump in with questions. If not, all good.
Thank you for the presentation and the demo.
Of course, absolutely. Appreciate your time. Thanks for joining.
Yeah, thank you so much. That's very useful.
Of course. Good stuff. Nice to meet you and appreciate you joining. Okay, cool. We'll leave it at that. Again, really appreciate your time. We look forward to hearing from you. Reach out to us. Rena has put the link in the chat there, so be sure to fill that out and reach out, and we'll be there to support. And good luck with the journey. We look forward to helping you out in a small part of it, and best of luck. But appreciate your time. Thanks, Hamlet. Rena is up.
Thank you, Alan.
All the
Bye,
best.
everybody.
Bye bye.